We're looking at a market rally to a market pullback, all in the space of a week. My portfolio has gone from £400 profit to £200 loss. What is happening? Hey guys, welcome back to the channel. It's the Capitalist Investor here, bringing you another episode. Today's episode is part of the Midweek's market series, and this is episode number 2. This series is designed to bring you up to date with all the key news from this week's investing market. Before we get into it, can I please ask that if you're new to the channel, you hit the subscribe button. I'm on a journey to hit 200 subscribers. With your help, we should be able to do this before the end of the week. As always, if you find value in this video, please hit the like button and help me get this video out to more people who could benefit from seeing it. So a quick recap of last week. The S&P 500 has rallied and 3,100, and we have discussed it was around the 3,000 level for a long period of time, testing the resistance at this level. It then rallied through to 3,100 level and then through further very quickly to the 3,200 level, and further actually beyond this. As many of my fellow YouTube investors realized, our portfolios were starting to turn green. This push from the S&P almost cleared the year-to-date losses on the index, and we are only 5% from the all-time highs. I mean, the Nasdaq did hit new all-time highs at 10,000, all of which is very bullish for the market. Why had the market rallied so much in the last week? Well, it was the job number in the US. The US economy surprised us by adding 2.5 million jobs, whilst economists anticipated it would lose more jobs. The market began to price in the effect that the US economy was much more resilient than perhaps first thought. This optimism was great and felt globally, with the FTSE 100 rallying to above the 6,500 level. But then since then we have had a pullback, and my portfolio, as many others have, very much felt this. We mentioned the fear index on last week's show, which is the VIX, actually fell below its 200-day moving average of 24.69. This would still suggest a bull market. The market, however, has risen quickly, and the market does appear overvalued to a lot of investors. But it seems investors are suffering from what's called FOMO, the fear of missing out, and optimism being at an all-time high has seen crazy decisions, such as Hertz, where the stock has rallied over 40%, even though the company was declared bankrupt. A bit like betting on penny stocks. Market speculation is at an highest level for at least 20 years among US option traders. In the past, when the bullish smaller trader positions accounted for 45% or more of volume, a roughly 15% medium dip followed in the next year. Right now, these positions are over 50%. The last couple of days, the market has looked stretched. The US Federal Reserve gave a statement this week. They gave an indication that nothing will change, and that includes interest rates. They gave a view on the US economy and suggested we might have some worse news to come. The Fed raises and lowers interest rates, aka borrowing costs, to prevent the US economy from either overheating or slowing down too much. In March, the Fed dropped its rates to near zero as the pandemic began to whack the US. That they'll stay there for years, meaning this recovery will take years. The GDP projection, the Fed predicts GDP will fall 6.5% in 2020, followed by a 5% gain in 2021. If you're looking for a reason the market has bounced back like a boomerang, you might want to focus less on Robinhood day traders and more on the Fed, which stepped in with extraordinary measures to keep market functioning properly, which it has made clear it will continue to do so. All of the above has hit the market and investors and resulted in a pullback in the market. This was then coupled with the news of US coronavirus cases continuing to increase. This has resulted in the S&P 500 now actually testing the 3,100 level back to where we were prior to last week. So does this suggest a bear market? I don't think so. There's still a lot of optimism in the market at the moment, and the fear of missing out, I think, will make the market carry on driving upwards in favour of the bulls. I did, if you checked out my Sunday session video, predict a pullback this week, as I think the prior week's rally was unsustainable. This has obviously proven to be correct. In terms of the bond market, it had a sell-off last week quite aggressively. This has started to fall away as people are pushing for safe havens. Gold has held up during the period and is even now trying to push higher, which does appear an outlier. Gold seemed to hold its price, which would suggest some level of uncertainty exists. Now on to some UK specific news this week. The Bank of England has teamed up with Dennis the Menace for kids projects. Dennis the Menace will soon be teaching children about debt, spending, and how supply and demand affects price, which I thought was pretty cool, eh? The Money and Me is aimed at children aged 5 to 11 and will be launched for schools in England, Scotland, and Wales in July. I think it's good that the UK Bank of England is involved in this, and I think actually the financial literacy that we teach within schools is definitely very poor. In other news, the PS5 was unveiled this week, and general reaction to it has been popular. Although interestingly, Sony kept their cards very close to their chest in terms of how much this would cost the consumer. The share price did rise on the new PS5 being announced to a high of 7646, but has since pulled back over a percentage down to around 7400 level. On other news, the UK economy contracted by more than a fifth in its first full month of lockdown, as shops and factories closed and workers were sent home. The Office for National Statistics, the ONS, said that economic activity was down by 20.4% in April, the largest drop in a single month since records began in 1997, and worse than many experts were forecasting. The fall massively outstrips the then record 5.8% drop in March GDP that the ONS reported last month. It means that GDP fell by 10.4% in the 3 months. So where is the positive news? Well, the next article I particularly like this week, and that is that pubs are planning on reopening. Well, Green King is, and patrons of the Green King pub will use a one-in, one-out green light system when they go to the toilet to guard against the spread of COVID-19. But the company insists it will retain the very essence of the Great British Pub. The 1,700 strong pub chain said it has spent 15 million on preparing venues to reopen, which could happen as soon as the 4th of July in England. The rival chain JD Wetherspoons has already laid out its blueprint of how pubs will look in a world shaped by the pandemic, with protective screens between tables and staff wearing goggles and masks. JD Wetherspoon's share price has significantly rallied over the past month, from around 8.40 to 10.80, where it sits today. I'm just hoping they reopen so I can get myself a 2 for £16 pitcher combo. Long Island iced teas all round. Before we wrap up today's video on midweek markets, I will quickly run through the main markets and their current levels. The FTSE 100 at the time of recording was at 6090, the FTSE 250 at 17064, the DAX at 11935, Dow Jones at 25482, Nasdaq 9527, S&P 500 3035. GBP to euro is currently at €1.11 to the pound, Japanese yen at 134.57 to the pound, US dollar $1.25 to the pound. Crude oil is still around the $30 per barrel mark, and that's for both Brent and WTI, and gold is sitting around $1,730 per ounce. So that's it for today's video, guys. I hope you found value in my analysis and some of my key UK news. As always, please let me know what you think in the comments below. I'll be sure to respond to all comments. Hit the like button, hit the subscribe button, and let's grow this channel to over 200 subscribers. Thanks for listening, guys. I've been the Capitalist Investor. Until next time, peace!